Well, with that, let's shift focus to the commodity markets. We have Manisha joining in. Manisha, what's the headline?
Well, it comes from gold really, because yet another day and yet another all-time high is how we are trading with gold right now. So can't take your eyes off that, because it's giving you very strong returns and it's making higher highs on the charts as well. Well, the latest count has been $3,070 an ounce on the higher side, and that's for the spot prices. When you look at the futures, the May futures, for example, that one is already trading above $3,100 an ounce there. Well, there is renewed safe haven buying. It's not about that there are tariffs coming. It's about tariffs which continue to come, and then retaliatory tariffs, and then reciprocal tariffs. So this uncertainty is what is really leading to a lot of buying in case of gold in sense of investment. So US now has imposed 25% trade tariffs on all automobile imports is the latest that we have. US also has announced reciprocal tariffs against 15 major trading partners. That would be on 2nd of April. And then there are also conversations about retaliatory tariffs that many of these trading partners will put back on US. And that is where you are looking at investment buying or a safe haven buying in case of gold coming in. The markets are looking at higher highs from here on. So when you look at banks and brokerages, they are constantly revising their gold forecast on the higher side. Goldman Sachs is the latest one, suggesting for the 2025, they are now looking at $3,300 an ounce on the higher side. But Goldman Sachs also says that in an event of a US recession, the prices could go as high as $3,680 by the end of this year itself. That's exactly the kind of language that Citi also seems to be using. They have revised their forecast for the next 2 months to $3,200 an ounce for gold. But they also say that if you look at slowdown concerns continuing, that $3,500 an ounce is also not too far away. Bank of America, the report came in yesterday, and they said that they're looking at $3,063 an ounce for this year, but they also expect $3,350 in 2026. So higher highs in this year and the next year, and 2027 as well, where you have most banks talking about. Bank of America also says that $3,500 in 2 years. If the investment demand increases by 10%, then that is a possibility. And then we have ANZ talking about $3,200 in 6 months. De Beer Group is talked about $3,300 in next 3 months, and Macquarie is talked about $3,500 by the end of this year. We already are trading very close to $3,100. We started this year at $2,650, so the kind of gains that we're talking about are quite huge here. Before I let go, this is a chart that we're looking at in 2025 in sense of commodities. So the first quarter is almost ending. And when you look at this, you'll see that gold prices have gained up by 17%, silver outperforming with 19% of gains. And we've seen a bit of a decline come in for the crude oil prices, though. And when you look at the metal prices, well, copper clearly an outperformer there, 27% gains there. Cobalt and aluminum is what US has put 25% tariffs on. So cobalt has run up 38% because of that. Tin has continued to gain 20% on that as well. What hasn't performed so well has been the zinc prices, minus 2.5% for this year, but other commodities in the positive.
Most of those metals are putting our equity markets to shame, Manisha, I must say. I mean, what are those gains? 30%, 40%. What a move these metals, not just precious metals, even other metals have been showcasing.